Sellers across the country are remaining confident. Mortgage rates are up, but do buyers care? Homes keep selling fast and the available inventory keeps falling. So that's all what we're looking at this week. Each week, Altos Research tracks every home for sale in the country. We analyze all the pricing and supply and demand and all the changes in that data, and we make it available to you before you see it in the traditional channels. Traditional real estate data is released monthly, and by the time it gets to you, it's kind of old news. So the news right now is that the market is already hot for spring, and the economic risks like the rising rates or falling stock market have not derailed that American home buyer at all yet. I'm Mike Simonsen. I'm the CEO of Altos Research. Let's look at the data and see the details for the week of February 7th, 2022. Available inventory of homes for sale fell again this week. There are only 256,000 single-family homes available. If you walk into the market today, there'll be another 80,000 or so that get listed this week. Many of those won't even last 1 week on the market, which we'll show in the immediate sales tracker in just a minute. As we've been reporting for the last several weeks, there are really no signs of anywhere in that consumer demand cycle slowing. Even as mortgage rates are climbing, we're obviously at record few homes for sale. This number looks like it's going to keep falling until the end of April before finally turning around. In this inventory chart, the most useful thing to observe, besides the low point on the far right, is 2018, right in the middle of the chart. The biggest question on everybody's mind right now is how will rising mortgage rates impact the market? If you're one of those folks who are still holding a bearish view on the American consumer, rising rates a big flag for you. So look right in the middle of this chart. In 2018, we had a year of rising rates to their highest point in like the decade. And the housing market definitely slowed. We can measure the slowness this way. Each year for the past decade, we've been removing homes from the resale market as we've converted them to investment properties. So each year we have maybe 6 or 7% fewer homes in the active inventory. You can see each year starting lower. But by February 2019, after that year of rising rates, we had 6% more inventory than the previous year. So a swing of 12 to 13% on the active market. The dynamics of the U.S. mortgage market don't really allow for any bigger change than that. Rising rates impact maybe your decision to own a second home, to add to your investment portfolio. Can I make 2 payments rather than 1? As payments get more expensive, I choose to own fewer homes. But nothing in the rate change really impacts any of the Americans who gained yet another $6 trillion in equity this year. They have their payments are locked in for 30 years. So rate changes only impact a little bit at the margins, the buyers and sellers at the margins. A few percent more homes for sale. So you'll feel it, but don't expect anything like increasing defaults or foreclosures. None of that is coming because Americans are in such a good place with their mortgages. It's also really hard to see how rising rates will impact first-time home buyers much. Like slightly greater payments shift my price target window a little bit. Like maybe I have to aim for a slightly less expensive home, but they don't scare me away from buying entirely. If I'm a late 30s millennial and it's time to buy my house, I'm going to be shopping for my house. If anything, rising rates maybe helps the first-time home buyer because they have a little less competition and a little more selection. So that's what we're looking at. Maybe a tiny fraction more inventory than last year, assuming rates continue to rise. By the way, this week, Thursday, we have the Altos Research February webinar. where we take a lot longer to dive into all the data. We'll actually show you a forecast model of inventory through the year, how we are factoring in rising rates. We will in this webinar have time to dive into all the trends. So we'll give you a framework for discussing the data, understanding it, and communicating it to others. If you, for example, have clients who need to understand what's happening in this insane market, then this webinar is definitely for you. These are limited to 1,000 attendees each month. So you got to reserve your spot. To get your spot, there's a link to register in the description below the video here. That's this Thursday, February 10th at 10 a.m. Pacific. Okay, let's move on to prices. If you've been following along each week, you know that my favorite leading indicator right now is the price of the new listings each week. Because the new listings get priced based on how the sellers and the listing agents see all the demand in their local markets. When the buyers are hot, the new listings price, they spike first. This week, the price of the new listings hit $375,000. That's actually the same as the whole market, which is actually remarkable. Usually the full market keeps some expensive homes so that move slower. So the price of the new listings continues to be below the whole market. Usually in February, there's this gap between the light red line and the dark red lines here. This year, that gap has already closed as the new properties are getting priced more aggressively. Usually that doesn't happen until like late March or even April. So this is a extremely bullish indicator for the year. Sellers know that the buyers are bidding up prices. They're already pricing to take advantage of that. So like I said earlier, there are no signs of higher rates cooling demand anywhere yet. I guess it's not surprising. If you're buying now, you got a rate lock on your pre-approval a month ago, maybe more. So you're still locked in at last month's rate. So it takes a few months before the buyers will be directly impacted. Okay, on to immediate sales. We had a little dip in total volume this week, which is probably mostly noise. We can expect new listings volume to climb through June. Of the 60,000 or so new listings, about 31% of them went into contract essentially immediately this week. That's percentage-wise, it's insane. It's not falling. It's, a third of new listings are gone in a couple of days. This is one area where I hope rising rates cools a little. It's unhealthy levels of buyer competition, and like the maybe rising rates brings a little sanity to the market there. That's what we're hoping for. Okay, let's close today with price reductions. Only 19.2% of all the homes on the market have taken price cuts recently. That's down from 19.5% last week, and it's actually fewer than last year this time. You can see how all the puzzle pieces start to fit together here. Buyers are buying quickly, and you can see that in immediate sales. There's very small selection. That means those listings on the market don't need to take price cuts to move. Again, this is a really strong leading indicator for home sales prices this year. Homes are on the market now. If they were overpriced, they'd take a price cut in March. They get offer in offer in April. They close in May. The May sales data gets reported through the traditional channels in June, July, and August. But what we can see right now in the first week of February is where that pricing support already is. So we can see it now. And it's going to be interesting to see where price reductions bottoms this year. When it turns up, maybe rising rates help get this back to a little more normal levels in the second half of the year. Price reductions tried to get healthy in the third and fourth quarter last year, but then they dipped back down over the winter. So keep your eye on this chart. Okay, that's the data we have time for today. As I mentioned, click the link to register for the Altos Research February webinar in the description below. That webinar is Thursday, February 10th at 10 a.m. Pacific. Click that to join us. We get a ton of participants in these webinars each month, so you should join us too. To get your own local Altos reports branded so that you can reach your clients, just go to altosresearch.com and book time with our team. There's a link for that in the description below too. Click that, join us. See you Thursday. More next week.